Morning, everybody. How are we all doing? Sorry, I'm a bit late. I was busy setting up my VPS and doing stuff. So a bit hectic this morning. I haven't actually looked at anything, so we'll have a look at everything in a sec. How is everybody? Morning, Steve, Church, Danny, Mumo, XR, Senji, Evil, Paul. It's a beautiful morning to have a beautiful morning crew. Good. It is quite nice this morning. Makes a change. Morning, Neo, Gregors, Callum, Surav, Duncan, Virginia, Monkey, Meow 2, DAX, please. There's the DAX. I've gone long. So DAX at the moment long. Two nice propulsion gap targets to the upside, two nice propulsion gap targets to the downside. Why would you put my pen all the way down there in the bottom corner? Stupid computer. So yeah, two good upside targets today on the DAX. Nice potential support at the weekly there. So that would be a good target, that propulsion. If it breaks long, downside target down there today. Obviously, if it's going to go bull, we could go anywhere. But today, obviously, news-wise, there's nothing, again, news-wise today. We've had the New Zealand rate come out as expected, 5.5. And the statement, we'll look through all that in a second. We got Powell testifying at 3 o'clock this afternoon. Obviously, everything important came out yesterday, which we'll look at, which wasn't a lot. So I doubt we'll get an awful lot out of that this afternoon. We might do, but so it's another no news day today, unfortunately. But so far this morning, pre-market range on the FTSE too big. Bloody great big 5-minute candle went in there just before the open. Big movement pre-market, look, today. So I will take a 5-minute break of the opening range there in 10 seconds and long on the DAX pre-market range. So we'll see where these go today. Not a lot of volume at the actual open this morning. Bit weak. So there's the 5-minute opening range. So take a break of that this morning on the FTSE. DAX thinking about going long. So we may have put in a new lower high there. So market structure at the moment, clearly bullish. Long FTSE. Doesn't look particularly strong though. Right, VPS, back to cloud. No, my own VPS. I call it a VPS, my box, my trading box. So I've set up the RSI2 strategy this morning, the daily RSI2. New account started this morning. Obviously no trades taken yet. So I'm going to basically trade that. Take all this. Need all that on there? So I've set an account up for that this morning, transferred funds in. I was just waiting for another account to close its trades, which it did this morning. So I've set up RSI2 daily on a live account to forward test. So we'll see how that goes, but no trades at the moment anyway. So keep you posted on that one. In fact, I can close that terminal down, save some processing power. Right, so let's look at the news. So news-wise today, as I said, is we've had the news this morning for the New Zealand dollar. It's a no-news day apart from that, apart from Powell. So not particularly expecting anything forecast-wise for movement. Tomorrow morning we got GDP, and it's the big one tomorrow. So we may well get some movement on the US tomorrow as the market prepares for CPI. We may get some movement into CPI as the speculative trades go into forecasting the direction, but we'll wait and see what happens with that. So overnight news, we scroll all the way back to yesterday. So this is Powell testifying yesterday. Made considerable progress towards the 2% inflation goal, but the recent monthly readings show modest further progress. So the CPI, as we know, for the US dollar is still at 3.3%, still 1.3% away from target, and we've slowed dramatically. towards that target. So the forecast for tomorrow is for CPI to be down to 3.1, so a 0.2% drop year on year. So that is the forecast. If we get that, it will be bearish for the US dollar, but it's still absolutely miles away from that 2% target. So while it would become slightly more likely there could possibly be a rate drop this year, it's still not anywhere near where they want it to be. So it's a bit of a tricky one to read tomorrow. If that comes out at 3.3, I don't think we'll get a massive rally on the US, but we certainly won't get a drop. So it's going to be a tricky one tomorrow for the US. So Powell basically yesterday, same old stuff. We are heading there, not getting there fast enough. Will be data driven. It's basically all that we've said yesterday. So they are not confident they're going to get target when they thought they would. So it's just carry on as usual. So that was basically the testifying yesterday. Yellen came out afterwards and said stuff along the same sort of lines. So I don't think we get much else this afternoon out of him, but you never know. So we'll have to wait and see. We've got overnight news. Where are we? The more bond sales from Japan, trying to make some money. The New Zealand rate came out at 5.5, which was the forecast. There was a possibility of an uptick to 5.75. We didn't get it this time around. Didn't think we would, but there was a possibility of it. Just quickly check what's going on with the indices. Wow. Nothing happening this morning. So this is the statement. So after the rate, we get the rate statement. So this is as close as you can get to forward guidance from the bank, from the Royal Bank of New Zealand as to what they are forecasting to do. The New Zealand dollar fell dramatically on the news that the interest rates weren't going up. So it looks to me like a few of the banks and institutions had forecast a potential increase because they said there was a chance of a 0.25. So it seems that the banks decided actually it's become less likely. So they've unwound that move that they factored in. So we've had a bit of a drop this morning. I don't think that will be sustained. I think we'll probably get an A-shaped recovery on that today, but we'll wait and see what happens. But from the actual statement, as you can see, there's nothing. There's no forward guidance whatsoever. So they haven't mentioned anything about increasing rates. They haven't mentioned anything about staying where they are. They haven't mentioned whether they're happy or unhappy with CPI. Nothing. So the market, understandably, has just unwound its speculative positions, and we'll see where we go from here. But at the moment, it's still neutral to ever so slightly bullish because there's a possibility of an increase in the New Zealand interest rate coming. That's it. So no more news. So a load of crap out of them, basically, overnight. Bank of Japan, a little bit more information coming out of them, but nothing about finance, about Forex. They're not saying anything about intervention. So yeah, that's it really. Overnight news. Again, another letdown. Nothing particularly exciting happening. Norwegian CPI came out at 0.2. But that's it. Yeah. So nothing exciting happening. If you look at the ADRs, I've banked New Zealand US. So that was the trade taken on Friday on the RSI extension on the hourly. Got out of that one today in the propulsion gap, which was my target. It's popped into this propulsion gap and bounced. So extended now, long, looking for a pushback. Very small target on this one. So I'm a bit cautious, obviously, because of the speed of that drop. But I'm looking for a little pullback today just up into there. And then potentially a continuation move on it, but we'll see. So if you look at the ADRs today, as you can see, we've had weekly ranges here. So Aussie New Zealand up at the highest level for quite a while. We got 225 ADR. Yeah, so 225 ADR moves are 2% of the year. You very, very rarely get them. So big move there from the Aussie New Zealand to the upside. We've hit the weekly range, 125% of the weekly range. So there's Monday. We had a slight gap down. So that's 125% of its weekly range done. So it's exhausted itself. We've got a 225 ADR today. So this is a massive overreaction, or rather a massive undoing of what they were thinking was going to happen by the looks of things. So I suspect we will probably get an A-shaped recovery on this one, because there's no real reason for this. However, we've said this before with this stupid New Zealand dollar, yeah? The rate changes, let's probably put New Zealand to US. So when we get these rate changes on the New Zealand dollar, we get these crazy parabolic moves start against it or with it. That was the last one, you know. So there's massive movement on the New Zealand dollar when we're not changing rates. So the last rate changes have been as expected, 5.5s. They've said that. They've told us that. They've given us that. But the market on the New Zealand dollar, for some reason, goes absolutely crazy when we get these changes in interest rate, or rather no changes in interest rates. So I got a short there. I need to put a target on. Go for the home run on that one, because the pound interest rate's coming down. So yeah. So whether this holds or not, we'll have to wait and see. I was expecting the opposite reaction today. So if you look at the Aussie New Zealand long term, we're up at the highs. So I was expecting some resistance here to drive us back down into support, because that was the last change in the New Zealand interest rate, which was nothing. It flew. That was another change in interest rates. It flew. And we've had another change in interest rates, or rather no change in interest rates. It's flown again, but it's flown up. So there is no bullish or bearish news there. There is no reason for it to do that. There is no reason for it to do that. And there's certainly no reason for it to do this. So I get the feeling that this could be just a run to entice longs in, and then they'll drop it back down again. Because there's absolutely no reason the New Zealand dollar should be that weak. It's not changed its interest rates. So, and Aussie basically is in exactly the same boat, not changing its interest rates. If you look at the interest rate differential between the Aussie and the New Zealand, we're 4.35 and 5.5. Where do you want your money? There, which should make it what? Bearish. Blown up. Doesn't make sense. So obviously inflation is ever so slightly better in Australia than it is in New Zealand, but it's not the end of the world. So I don't quite know why that reaction's there, but I suspect it is just a bank move, and they've slipped out the highs, and that's probably slippage. But all the New Zealand dollar pairs, obviously, as you can see by ADR, have done very much the same thing. So I think the banks were overloaded in the wrong direction on the New Zealand dollar. So these are potentially, I think, good mean reversion opportunities today, all of them. So drop down lower time frames, wait for reversal. We've had a reversal alert on that one already. And try and play the mean reversion back down into the news. You're probably best to get out in here in case it does fly and they add into that for some reason, but doesn't really make sense to move, does it? So good targets to the downside. I've got a short on that one. Say I'm playing that short. You haven't had a reversal alert on that one yet because of the price action, but pushing down into there. And obviously if it does push, it's going to be very, very extended. So the best trades for this would be Euro New Zealand and Pound New Zealand, definitely, because the pound is going to be dropping its interest rates. The euro already has dropped its interest rates. The New Zealand dollar CAD potentially is a good long as well, because the Canadian have dropped their interest rates, and there doesn't seem to be a reason for that move. So we'll see. But that's a massive extension, obviously, on all of those today. So you've got to be careful with these, because the market does, when it puts these large parabolic moves in. There's a good example there. Look, there's two good examples there. Parabolic move for no reason, complete undoing. Parabolic move for no reason, complete undoing. Parabolic move for a reason, retracement into propulsion and continuation. Yeah. So in this case, what you want to be doing, as I'm doing here, is getting out in the propulsion gap to be safe, just in case. Yeah. But it could well just do a complete A-shaped recovery. Yeah. So this is the sort of movement we're getting at the moment with these interest rate changes and these CPI numbers and the unemployment numbers, all these main key drivers for fundamentals. Nothing's changing. We're not changing interest rates. So although they're like, holy crap, we didn't get it this time, boys, doesn't mean it's a move in that direction. It means it's just a knee-jerk reaction. It's an execution of orders. Because there's light liquidity, you get slippage. That's all it is. So there's no reason, I don't think, why that should be going and continuing in that direction. But this market can be very irrational, as we know. So just be careful. Do not over leverage on it. So those are your ADRs today. RSI's very little. Only thing we've got extended on RSI is an hourly extension Aussie New Zealand. And that's also a 4-hour extension. Yeah, so nice big extension above the 80 level there. This has been driving now for 3 weeks straight as well. Very extended. If you look at this on a weekly, we've got big bull candle followed by big bull candle followed by smaller bull candle followed by now a big bull candle. That's 4 weeks up. Yeah, this thing's tired. Look how far away it is from the 72 and the 24 moving averages. When we get that far away from these moving averages, we tend to want to pull back to them. Yeah, market's exhausted. So good short opportunities. But you will probably already be short on this if you are playing Aussie New Zealand, because we've had plenty of extensions to the upside already over the last 4 weeks. But beautiful targets to the downside as well to aim for. So we'll see what happens. From a news perspective, there's no more news this week for Aussie or New Zealand. It's all US dollar this week. Your next news, Australasian, is the CPI number, the quarterly CPI number next week for the New Zealand dollar. So that could well be the turning point in this one. We've got the Aussie unemployment coming out as well the day after. So again, if the unemployment rate comes down, it goes up rather in Australia, that'll bring the Aussie New Zealand down as well. So that's your next news on those two. So those are your ADRs and RSIs. Aussie dollar yen is also 4-hour extension to the upside. As we know, it's parabolic. The yen dying a death. So we've got a retest this morning on US dollar yen on the reversal alert that held. So we pulled back into the weekly support. We're now pushing back. We've had a retest there. So your M pattern potentially is here. This is the right shoulder potentially coming back down. So key day today, US dollar. We haven't got much news on it apart from Powell, but we've got potentially a load of movement on the US dollar coming tomorrow and Friday, because it is just all about the US. So it's CPI tomorrow, the second biggest number we have in news, inflation and interest rates, the top two market movers. We've also got the unemployment claims, which lead into the unemployment rate, which is the third highest driver. So big day tomorrow for the US dollar. Then we've got the producer price index in Michigan on Friday. So there's a good chance if we get negative numbers here, that M pattern reversal on the US dollar yen is going to work. We're going to break that weekly low and we're going to start that reversal. So we'll see. However, if it comes out positive news, they are going to retest this 162 level. And then we need to see what the Japanese do about it. At the moment, they're doing nothing, but we will see. So those are your RSIs and ADRs. Hedged on the DAX this morning. There's no volume this morning. It's dead as a door now, unfortunately. So we'll see where we go. Again, same play as yesterday, really, that I did with the Dow and the NASDAQ yesterday afternoon. If we can get one to target, close to pay for that hedge. So if I can get a $500 profit on this one, I'll just close that out as a hedge loss at 350 and take 150 profit. Tricky today. Very little volume. It's looking bullish though. So market structure at the moment is looking like it wants to go bull on the FTSE. Good target upside as well. So we'll see. And we've obviously got market structure pointing at a new lower high going in. So it's looking bullish, but very, very slow this morning. Morning, Bogdan, Chucks, Linus. Why are these yen pairs going down? Going down? What do you mean going down? Going up. Big star. Going down. New highs just gone in this week on Euro. DAX, just done DAX. Literally, just been looking at it. Am I on delay or something this morning? There's the DAX there. Hedged on it this morning. So it's going up or it's going down. If it's going down, it's going to go and test these propulsion gaps. If it's going up, it's going to test that one. If I knew which way it was going, I'd press that button, but I don't. Right. So this morning, we're just going to whiz through all the FX pairs, have a look at everything, where everything is. Only profit I've closed out this morning is New Zealand dollar something. What did I close out this morning? New Zealand dollar, US dollar. Yeah. So closed out New Zealand US this morning for 0.6. Yesterday, I did a exit on pound CAD. So got out of that propulsion target as usual. So initial entry was there, second, third, exit, done. What else did I get out of yesterday? Pound New Zealand. Oh yeah, got a pound New Zealand yesterday as well. So that was the reason I got out of that is because it's been forever. So I took that off yesterday, obviously because of the news today. I just wanted to get out basically. So been stuck in this one for 5 days. Absolutely gone nowhere. It gave me an opportunity to exit with a nice little profit, so I took it. So it wasn't a big profit. It was about 0.3 or something, 0.35, but got out basically because it was just stagnated. And I got out Euro US as well yesterday. No, I didn't. So the that Euro US exit yesterday was just a partial exit. So this is where the EA had a funny 5 minutes when I had the power cut, and it took 2 trades at the same level. So I decided yesterday just to use some of the profit from yesterday just to close that one out so that I'm in a proper position. So I got 2 on it. I had 2 positions here at the same, and then a single there, which obviously was bad. So I took one off just to make sure that it was nice and level. So it's a proper trade now. So that's just sitting at break even. So that's all I've banked. Drawdown's okay. It's just US dollar yen. If I'd listened to myself, I wouldn't be in 4% drawdown, and I wouldn't have a 2.8% loss on the account this month. I'm on 4.6% up, which is great, but 2.8% loss because I took that US dollar yen drawdown control. So unfortunately, my month would actually be sitting at over 7% with 1.5% of drawdown if I had listened to myself and told myself not to trade the yen, which I did tell myself. You all heard me tell myself not to trade the yen, and then I traded the yen. See? If you listen to me, it works. I don't listen to me. So why would I expect you to? Anyway, but market structure is looking good at the moment. So I'm hopeful we get negative US news tomorrow, and that will help this on its way. If we can get that down to that break-even line, I'm off. Out. It's killing me. Swaps on this thing. I'm 4, 5, 6, 7, 8, 9, $1,000 in swaps. $1,000 in swaps. I've only been holding it since the 24th of June, so I've only been in it for a couple of weeks. $1,000 it's costing me to trade this thing. Just don't want to be interested in it. If I wasn't doing these live rooms, I wouldn't even have it in my market watch. Just wouldn't watch it anymore. So we'll start with the yens because they're peeing me off. Obviously, we know we're parabolic. We know the Bank of Japan is in all sorts of trouble. We know the interventions that they've attempted have all failed so far. We've had a couple of large exit orders. It looks like they weren't interventions, but it looks like these were large exit orders we had just before we got to this high. I think this is probably banks just taking some profit before we get there, just in case they did press the button again. They haven't pressed the button again. They've allowed the market another $2 of drawdown. So the question is, where are we going to turn? So the market forecasts are 161 to 163. So at the moment, 163 is up there. Why is that lime green and a horrible... Why did I change that? Dark goldenrod. Who's been on my terminal? There you go. I don't know why it was that color, but that is your upside limit that the banks have kind of mentioned. Obviously, it's nothing to do with the banks. It's down to the Bank of Japan what happens with this, but that's 200 ADR away. So for me personally, I've got an aggressive short at that level. If we get a double top, I will try an aggressive drawdown control exit. That's it. If it breaks above that level, I'm taking more loss. So I have no confidence in the Bank of Japan at the moment. So we'll see what happens with that. So all the yens basically. New Zealand yen obviously has had a nice little down day today, but that's just because of the New Zealand dollar. Probably not going to happen. So as soon as that New Zealand dollar weakness disappears, the yen weakness will take over again and undo that completely. Assuming we don't get some yen strength. But as you can see, everything is just pushing. It has stalled out and slowed right down. So the yen, they have stopped weakening in it. Or the Bank of Japan are starting to strengthen it ever so slightly, but not with any conviction, as you can see. Euro yen, we've just made new all-time highs again today. Swiss yen up at new all-time highs. CAD yen, not quite same as the US yen. So a little bit of weakness in the US and the Canadian dollar. And the Aussie obviously broke an all-time highs as well, helped by that New Zealand move. So it is still parabolic. It is still stuck. There is still very much the chance of an intervention move, 400 to 600 ADR coming. But the Bank of Japan, as we've seen on Financial Juice, not saying a word. So, yeah, don't know. Yen's steering clear. I'm in the US dollar yen, but not really interested. I'm going to cover all the Swiss francs as well, because, again, that's something I'm not trading at the moment, the Swissy. The Swissy basically is completely erratic based on the Swiss National Bank basically not being able to tell us when they're changing interest rates and completely screwing the market every time they do it. I was just watching on my other monitor the FTSE, just testing the opening range low. So hopefully this little propulsion move before the open is going to hold. Looks like this is the area they're buying today. So we'll see if that holds. So yeah, excuse me. Swiss franc totally stuck in a cycle of confusion. At the moment, the Swissy is and should be weak because they've dropped interest rates twice completely unexpectedly without telling anybody, which obviously devalues the Swiss. So it should be continuing that way. Obviously, if something else happens, like, for example, the US dollar gets a load of negative CPI numbers, that will over-trump the Swiss franc. But any sort of conflict escalation, any safe haven runs required, the Swiss is going to power up dramatically. So I'm steering clear at the moment because obviously we're doing stuff like this, where they're just not telling us the interest rates are changing. We're just collapsing and flying all over the place. So with all the Swiss franc pairs at the moment, if you are using any stop-based strategies, absolutely fine. Obviously, the Swissy moves quickly and erratically, so it can make you decent money. If you've got a fixed downside and unlimited upside, it can be very profitable, but it's not the way that I trade. So I'm steering clear at the minute. RSI extensions and ADR extensions will still work as long as it plays ball. But, at the moment, it's very, very tricky. So all the Swiss pairs have gone through a phase of, obviously, again, another little shock, but not really strong directional movement, more grindy. So they're all a bit confusing at the moment. So hence me just steering clear. But as you can see, RSI movement is very, very, very small. So when we are getting these quick sort of intraday moves, they tend to be very flaggy rather than pullbacks. So just be very careful with the Swiss franc at the moment. I'm just giving it a wide berth until they've settled down. The fundamentals on the Swiss are pointing basically at potentially another interest rate drop. Yeah, they're at 1.4. They're below target inflation. Inflation hasn't moved. So if that comes out as a negative, the next CPI number, they'll want to get this down again because they don't want this to drop too far. Negative inflation is deflation. You do not want that. So a healthy economy will operate on a 2% inflation figure, increases GDP, keeps everybody employed, keeps everything ticking over nicely, keeps mortgages low, keeps borrowing low, keeps savings all right. Yeah, it's just a happy place to be, isn't it? This is what we're all striving to get to. These guys are under it. Yeah, so they've got to be careful they don't drop down and go into the situation we've had before where they've been at negative interest rates, which is what they don't ideally want to do. So there's a chance that this will just drop again without telling us. So again, in that situation, it's going to be weakening for the Swiss franc. The euro is also weakening, which will also weaken the Swiss franc. So bias really should be long on everything Swiss. It's just trying to find an opportunity to get in, which is the tricky part. So watch for propulsion gaps, watch for RSI extensions to the downside, ADR hits to the downside. But, at any point, if there's a safe haven run, it will just go and it will stop. It won't stop. So, this is why it's dangerous to trade. Morning, was can't say it. Bogdan, do you use cashback services? No. No, there's no point. It's just no point. The amount of cashback you get is so tiny, it's insignificant. And my broker doesn't allow it. So most brokers that offer any cash incentives, so if there's a match bonus or anything, they won't allow you to use cashback services anyway. It was something that was popular way back in the day when spread betting was more popular, but many people use it now. AusCAD, right? So we'd go the Aussies. Australian dollar, obviously, at the moment, from a fundamental perspective, 4.35, inflation at 3.6, coming down at a fairly decent rate. They have also said, same as the New Zealand, there is a chance that they might increase interest rates again. If that inflation figure bounces, they have the possibility of putting that up. Yeah, so there is a possibility for another interest rate rise, just to make sure that they really hammer this home. They're doing a fairly good job. They want to make sure. So with the Aussie at the moment, bias should be really neutral to ever so slightly bullish, a little bit, but nothing dramatic. So obviously being a commodity pair, it moves very nicely, like the Canadian and normally like the New Zealand dollar. So good market structure. Yeah, very easy to trade. Bias is really long or short. I'm taking the Aussie in either direction. So any RSI extensions to the upside, shorts. Any RSI extensions to the downside, longs. So I'm happy to trade this in either direction at the moment. Probably a little bit more long than short, but it's business as usual. So there was an entry last week there, which has played out back into propulsion. So just waiting for signals on that one really to get into it. Aussie dollar, yen and Swiss we've covered. Aussie New Zealand. Now this is the fly in the ointment, obviously. The Aussie New Zealand goes into parabolic runs. So when one of these gets control, it stays in control, and it's usually the Australian dollar. Bigger economy, bigger country, more people, it tends to be stronger. So big strong push to the upside on this news. Now we looked at this one. This is a range bound pair. It's same as the euro pound, same as the US dollar CAD. Close trade partners, very little chance, very little reason for them to want one currency to be massively stronger than the other, which is why we stick around the one level-ish most of the time. Doesn't make sense for one of you to be stronger than the other, because then you're not going to want to do is trade as much. So they're both commodity pairs. Both move in a very similar way. We've got the range highs up here, which it looks to me, we've got this high here coming up with this propulsion gap. This could be where we put the new range high in. It could slightly overshoot it and then come back down, but it looks 150% of the weekly range. There you go. So it's still pushing. It looks to me like it will probably pull back from here. So this is the current range that we're in around here. So we're up at the range highs. If it breaks out of this level, it's probably going to want to pull back before it makes a run for that level anyway. It's not going to be able to just go parabolic straight up into those highs. So very, very good mean reversion opportunity. If you look at the daily time frame, an RSI full... I changed it yesterday, didn't I? I was going to say. I was mucking about with RSI 10 yesterday on the 4 hour. So I plotted it on the chart. Let me just change it up to 14. If you look at the RSI 14 on the daily, when you get up to these 80 levels, it's virtually impossible for the market to hold it. Yeah. Every single time we get up there, we collapse. So a 14-day run in one direction just can't sustain it. Yeah. So we are very, very, very close to tapping that 80 level. So even if we do break out of this current short-term range we're in, the market is going to be absolutely exhausted. So we'd be looking at multiple down days coming. So it's a really good entry short. I'm not trading it personally myself at present, but it's a good one short. You're probably already in it though, as I said earlier. So we are getting to total exhaustion levels. Look at the last entry, the last trade I was in here. Yeah, I said, didn't I? You can't see the propulsion gaps on this chart at the moment, but I said, this level here is what we will come and test. I got stuck in the squeeze. I got out of some of it here, as you can see. So took some profit there, took some profit, was doing aggressive drawdown control. It just got to the point where I was squeezed to almost 10%, which is no way, I'm not going above that level. That's where it was. And I said, you watch, next week we'll be back down here. And it came straight down to target. So we're in very much the same situation now on the current squeeze. Yeah, it's going to pull back. And the likelihood is, potentially that propulsion gap there, but you've got this support resistance here, and you've got this level here, which is untested. So either we're looking for a pullback into that level or back down into that level of 50% or a 38 retracement, shallow pullback. Or, as I said, that New Zealand dollar should rally and we'll be coming back down and retesting these lows. So very good opportunity for shorts at the moment if you're not in it. It's massively extended, as we can see. Aussie dollar, US dollar, I've got short on this at the moment. Again, another little cock up on the EA because of the power cut. I got a double entry there. So I'm slightly over leveraged on this. Should have really done a little DD control on this one yesterday as well, in the same way as I did with the euro. I didn't see it though. So not really got any control over this. It's down to the US dollar. We're completely flatlined. So got in on that RSI extension on the hourly. We were looking for a pullback back down into here. Didn't get it. Pushed up. So I'm still targeting roughly around this level. Pound New Zealand weekly range. So New Zealand's still dropping. So target on this one is going to be back down. I'm just going to target back down the top of that propulsion gap, I think. So that's ADR today. So if we can get some strength in the US dollar, get an ADR hit, done. So not worried about it because average is well within an ADR. Had Swiss, covered all the Swissies, covered all the yens. Euros, and catch up on the chat. Morning, tune in from Trinidad. Just now going through your boot camp. Good man. Been such a happy trader since I ditched the yen and the Swiss pairs. It's good, isn't it? I didn't. It's one of those things in life where you listen to yourself say something, and then you do the opposite to it. And as you're doing the opposite to it, you go, why am I doing this? I'm going to do it anyway. And then literally a day later, you think, you're an idiot. Yeah. Do not trade the Swiss and the yen. They are just too unpredictable at the moment. Morning, Franco. Corey, take your time. A lot to digest. Have fun. Yeah. Yeah, and also, Corey, you've got to catch up on all of the live rooms as well. So I think there's 4 years worth. They're roughly 1 to 3 hours each. So good luck. Yotko, morning. Pot DJ. Kennelly, morning. Morning, Mark. Right. Euros. Just have a drink. Sec. FTSE's stalled out again at the highs. Markets have got absolutely nothing today. Absolutely nothing. It's just not moving. We're in total rotation so far today. So might be a double hedge day, which should be a pain. I'll have a look at this before we end the session and I'll put some targets in place. Euro odd. As you can see, totally stuck. Have been for 3 weeks now, or 2 weeks-ish, just under. Yeah, just not going anywhere. So no reason for the Australian dollar to move at the moment. We've got no news. Euro dropped their interest rates, so it is bearish. So the stance on this really is short. I'm short only on the euro pairs at the moment. And as you can see, there has not been a signal to short this. There's only been one little signal to long it as well. In the last 2 weeks, it's completely stagnant. So nothing to do there, nothing to see. It's just stuck sideways. But obviously, as you can see, overall, it's bearish. And as the interest rates are coming down on the euro, it should remain that way. And as the Australians are potentially going to increase again, although kind of less than 50% chance, I think, even though they are neutral and euro is bearish, that will make it bearish. So you want to be looking for ADR hits to the upside, RSI extensions up, whatever RSI you're using, and yeah, try and get in the shorts if you can. Euro CAD got short on this one at the moment. Propulsion target 125 ADR. So that was your entry on Friday. Trying to work out what day it was. There was another entry there. Again, so that was a nice quick in, out, done. That came down to target, although I got out a bit early. So yeah, good looking shorts at the moment. Canadian dollar obviously has dropped its interest rates. So has the euro. So it's a bear against a bear. Bear against a bear equals range. So nothing particularly bias-wise to worry about on this one. It should just go up and down very nicely and orderly as it has been. Pretty much every trade on this has worked out within 2 to 3 positions. So there's a single there. There was a triple there. There was a triple there. There was a single there, and there was a double there, and I'm in a single now. So yeah, all good. Easy to trade at the moment, Euro CAD. Equally, you can take longs as well. Yeah. So when you've got something that's got no bias, it will go up and down with nice market structure. This is beautiful market structure. Look, it's textbook. High, higher low, higher high, higher low, higher high, higher low, higher high, kind of a higher low, higher high, higher low, higher high, higher low, bit of accumulation mucking about, higher high, market structure shift. Beautiful. Textbook. So as long as it's doing this, and this is what we want, market structure all the time, you just can't stop making money, basically. So long may this continue. There's no reason why it shouldn't. Euro pound. So this one I've got set bias both directions at the moment. Reason being, it's a range bound pair. It's got a tiny little ADR of 26, so it just doesn't move. We've got interest rate drop on the euro, and the pound is about to drop its interest rates. So there's going to be a little bit of a movement up when the pound interest rate drop happens, and then the euro will drop its interest rate, then the pound will drop its interest rate, the euro will drop its interest rate, and as long as that continues to happen, which it should do, we're just going to go up and down all the time. So it doesn't matter which way you take it. The problem you're going to have is trying to get in because it's so crap at moving. So last entry was there, single entry, in, out, straight down into the retest of the propulsion, just not really going anywhere. So there was a little long there, but it was a gap down entry, so it wouldn't have signaled with any of the EAs. But yeah, just waiting basically for it to do something. Euro New Zealand. So again, bearish stance on this from the euro. Don't know what this move is on the New Zealand yet. It seems to be continuing at the moment, so they are really pulling out of this New Zealand dollar. But yeah, I mean, it's no long bias on it, so no reason why it should continue this way. As long as they don't dump the New Zealand dollar for some unknown reason, but we'll see what happens. So we're testing at the moment this propulsion gap here, which is that low break. So we had support, propulsion break. We tested the propulsion gap a couple of times, but we haven't retested that low. So I think there's a good potential that we're going to find limit orders sitting in that area there at 225 ADR. So shortly at some point today above 225 ADR, good mean reversion opportunity if we get there. These 225 ADR levels, I mean, like it says on the indicator, 2% of the year we get above that level. It's usually because of a fundamental shift. This is not a fundamental shift. There is no difference in the interest rate today as yesterday, as the month before or the month before. So if you go above 225 ADR on no news, high probability of a mean reversion because there's no reason for that. Therefore, they will probably undo it. So these are all really good short opportunities at the moment, and especially that because it's coming up into a resistance area we know that limit orders are probably sitting at. So reversal alert on this one is there, which gives you, good 125% of ADR drop. So even if you wanted to use a stop loss on this one, your risk reward is 3-4R. So very nice short opportunity on that one. Euro New Zealand. Euro US dollar. I've got shorts on this at the moment. A bit lackluster with my targeting, i.e. not doing it. Stay with ADR, I think. So target on this one, previous high, propulsion that broke it. And that's ADR. So the only reason I'm putting target there is because it's within ADR. So there's a higher probability of hitting it today. But obviously there's a good chance it'll come and retest these propulsion gaps, or it might find some orders at that point as it did there. So targets within all potential downside supports. So yeah, like it short. Euro obviously short. Any kind of strength whatsoever in the US dollar, this will be down there within ADR very, very, very easily. Yeah. So you can see what happened on FOMC last week. Yeah. Even if there is no news, an ADR whipsaw is easily achievable. So keep targets fairly tight. Just totally stuck. Look at this thing. So this is a 2 inside bar setup on the FTSE called a 2IB. So you've got a candlestick there, you've got an inside bar, and then you've got an inside bar, almost it's double bottom, but an inside bar on an inside bar. So it's a 2 inside bar setup, which is basically on a lower time frame like the 1 minute chart, you'll find a symmetrical triangle formation, which is usually a contraction before an explosion in price. So pop in one direction or the other. So setting up quite nicely on the FTSE. Something. Quite what? We don't know. And the other thing that happens on these 2 inside bar setups is they continue to be railroad tracks. And they just do that. Because there's literally, this is just algorithmic order processing. There's nothing going on. Euro New Zealand, morning Ismet. Euro New Zealand looks like a cash cow. Hopefully, yeah. What is ADR? Go to the website. ADR reversal indicator. There's a video on this page which explains ADR. There. And if you want to know more, watch the Position Trading Bootcamp. It's all free on the website. That explains why you need to know what ADR is. Yeah, if you don't know what ADR is, you're never going to make it in trading. Unless you're trading one instrument only, then fair enough. But if you're going to trade multiple instruments and you're not using ADR, you're screwed, basically. Because it's the average daily range of movement. New Zealand dollar Swiss 175 ADR. So I've covered Euro US, haven't I? New Zealand Swiss. So still dropping this New Zealand. I wonder how far they're going to take it. New Zealand CAD not quite made it down. New Zealand US not, but everything else against the New Zealand dollar weak this morning. Obviously the Aussie. Right, so there's your euros. Pound. We're still waiting for Bailey. No idea why he's being so quiet. We are the first country outside of Switzerland who never really went above inflation target anyway. But we are the first country to hit our inflation target. We have the second highest interest rate in the world, and we haven't dropped it yet. Absolutely no clue what is going on. Our GDP is doing fantastic. Our unemployment is stable. There is absolutely no reason why we should not be at 5% now. I don't know why he's not done it. I have no idea what the logic is. I'm suspecting it's something to do with the election, and they decided they didn't want to do any rash moves on interest rates while the election was going on. We just had a general election in the UK. That's the only thing I can come up with. But that is coming down on the next figure in August. That's coming down to 5%. So that will weaken the pound. So the pound at the moment is sitting stuck because obviously I think the rest of the world is also going, why the hell haven't they dropped their interest rates yet? But no one's going to want to go long on the pound from a long-term perspective. So we're stuck. I'm not short only at the moment on the pound, but with interest rates, the market tends to move 2 to 3 weeks. Well, it varies, 1 to 4 weeks, let's say. Any time in the month up to the interest rate decision, the market tends to start factoring in what it thinks is going to happen. So our next interest rate decision is beginning of August for the pound here. There, August the 1st. Yeah, so that is when the interest rate decision is. If it's anything but 5%, I'll be dumbfounded, as I think will everybody that follows anything to do with finance. So the forward movement for the pound should be a steady decline in the same as the euro, but it's not going to come down parabolic because we know it's happening. The market will be factoring it in. So we should have very nice market structure on the way down. as the pound is trading against things like the Australian dollar, who are staying neutral, ever such a slight chance of going up. So you get pushes and pulls constantly on it. So at the moment, I'm trading both directions. In a pound New Zealand 225 ADR. There we go. So that New Zealand dollar getting creamed. Wow. No idea why they are being so bad to the New Zealand dollar, but they don't like it. There's nothing said that was detrimental. There's nothing said, basically. There's nothing positive, nothing negative. They're just unwinding this position. It looks to me like the market has just over-speculated on the New Zealand dollar interest rate rise. They thought maybe they were getting it, and they didn't. But anyway, pound, so sideways at the moment. I may go short only on it, but market structure should be nice on all the pound pairs. No reason for it not to be. So at the moment, I'm trading everything in both directions. As you can see, there haven't really been any signals. Just didn't get one there. Didn't get one there. There was a long there back here, which played out nicely. But yeah, it's just not moving enough at the moment to get into any positions. So at the minute, we're reacting at these double monthly lows down here and just holding at the minute because we're waiting for something to happen. There's no news coming. And I think the market's really waiting for Bailey. We were fully expecting Bailey last week to say something. He didn't. So I don't know when he's next forecast to speak. Not soon, is it? We've got the monetary policy report hearings coming up. We may get something in that next week. And obviously, we've got our pound CPI number coming. So if that drops below 2, we're definitely coming down. The danger is if that drops below 2 to 1.9 or something, we've overshot. So we could well go from a 4.25 to a 5.25 to a 4.75, which would definitely tank the pound. So in that case, if that CPI number comes out lower than expected, I probably would want to go short only. But yeah, we've got GDP numbers tomorrow, so that might kickstart something on the pound, but there's nothing else news-wise coming out. Aussie dollar, New Zealand dollar, got an RSI alert. Just come out on the hourly, which we know about. Pound CAD, same thing. So had shorts on from that entry there. Got out of those yesterday. So again, no reason not to take this long or short at the moment. Canadian dollar already dropped interest rate. Pound going to makes it neutral. Obviously, this will get pushed around a little bit with the US dollar as well. But yeah, no reason why we shouldn't be trading this one in either direction. So just waiting for the next signal, really. That short worked nicely. Waiting for ADR or RSI extension to get into a next entry. Pound Swiss, pound yen, covered those. Pound New Zealand. Obviously, this one at the moment got short on. No idea why this is parabolic. Not a very good short order there, but there's a little accumulation the day before, but it's kind of, if you look at that, that's really market structure based. It's not an accumulation break, which is what a decent propulsion gap would be. So I'll be getting in short if we break 250 ADR today. If we break 250 ADR, don't even have that on the dashboard because it's so unbelievably rare to get above 250 ADR. Yeah, the numbers from 2% drop down to lower than 1%. It's just not worth even having it on the chart. It's just pointless. So if we get above that level, great, I'll take another short and I shall be making a lovely little profit on that when it pulls back. But obviously that is your high. You've got 3 ascending highs coming up, which could act as resistance. So it'll be a case of scale in, and if we still haven't come down, we're getting out on that leg at some point. So short at the minute on that one. Pound US dollar also got shorts on at present. Again, looking for a pushback down into these highs, that propulsion gap. So it's a lovely accumulation. That's a really good propulsion gap. That's exactly the type of propulsion gap you should be targeting, an accumulation break. So it's basically a breakout which will get retested. So looking for that to come down. Again, all depends on what happens with the US news tomorrow. If we get bullish US news, happy days. If we get bearish US news, scaling in. So, but pound US dollar, second most liquid pair on the planet. It will just go up and down, up and down, up and down with the US dollar news. So trade in either direction, no problems at all. If we don't get any bearish news on the US dollar, and if CPI for any reason continues to pump up on that one, this is one I would definitely want to flip to short only, because we are going to be dropping the pound. And if that US dollar interest rate decision is never coming this year rather, we really will see that coming down quite nicely. So New Zealand US ADR 150. Okay, so just tap 150 ADR. There's a potential bottom there, which is that propulsion gap fill. Doesn't look like there's enough buyers in this market at all today, though. So I suspect we're going to come and test. This is the last month low. That's last week's low. So that's a good support area. We've bought that up twice. So we're going to find some limit orders, definitely at monthly lows and weekly lows. New Zealand dollar yen 200 ADR. Again, just not stopping. So yeah, New Zealand dollar. Obviously, we've had news today on interest rates not changing. So obviously the market's gone completely crazy because nothing's happened. Make of that what you will. It will either continue or it won't. But I'm mean reverting the move. So it's a start of a move, but there's no reason for it. But then again, there was no reason for the last one, was there? It's one of those things that's just bizarre. The New Zealand dollar just moves for seemingly no reason at the moment. It's not really done that before, but it seems to be overreacting to all interest rate decisions. So don't know. But yeah, mean reverting it as normal. I'm only trading New Zealand US and New Zealand CAD. So again, next entry long will be in that propulsion gap just before the monthly, weekly low. So if we get all the way down to there without stopping today, very high probability of a pullback. So we're nicely extended. We will be getting down below the 20 extension. The 20 extension very rarely fails. US dollar CAD, I've covered US dollar Swiss and US dollar yen. So US dollar CAD had an entry on this one last week. Decided to take a break even on it. Just not going anywhere. So just happily waiting for a new signal on this one. US dollar CAD has been an absolute dream for weeks and weeks and weeks. It's just going up and down and up and down and up and down. And it doesn't matter what you do. You just print money with it. And there's absolutely no reason for that to stop happening. So just carry on longing and shorting it. Every signal you get, keep doing the same thing over and over again, making money. So US dollar news tomorrow will either be up there or down there. If we're down there, I'll be longing it. If we're up there, we're shorting it. There we go. There's all your pairs. US dollars push. Oh, that's not pushing, is it? It's stuck. Another doji going in. God, look at this thing. Just not moving. Absolutely nothing you can do with it today. It's a total dead duck. Right. It's dead. He is normally gloom and doom, isn't he? Who, me? Call it gloom and doom if you like. I call it realism. The reason you find me doom and gloom is because I'm not here going, hey, everybody, look how good I am. Come and buy my course for £2,000 and I'll teach you how to trade. I don't know why I went Australian then. I have no idea at all. Oh, no, not me. Oh, who are you talking about? Powell or Bailey? Bailey, probably. Yes. But yeah, I'm also not like most people online trying to sell you a load of crap. Yeah, Bailey. Yeah, he's not really doom. He's just deadpan. He's like, yes, and I think that today the market's got it right. I'm very, very happy about it. Just realised I can do an impression of Bailey. That's weird. I've just had a discovery moment there. Every weekend, I go back to the Bootcamp vids, golden nuggets. Hit the like button. Hit the thumb. Yeah, so we'll see what happens. But Bailey's got to come out and say something at some point. He's kept us in the dark for far too long. We're just not getting fed a date. The whole market is assuming it's going to be August. We were highly predicting it was going to be July. And when that number hit a day before the interest rate decision, I think the market was like, we've done it. Well done. Let's get it down. Didn't happen. So if it didn't happen the day before, it's got to happen August, isn't it? So that pound has got to come down. But Bailey's just not saying anything. Totally blanking the market at the moment. And I don't know why. We've got an awful lot of news coming out before that as well. So yeah, we'll see. We will see. Oh look, DAX has decided it wants to have a go at a long. Hopefully it will take the FTSE with it. So FTSE today, my target there is 446. Is TP1, which would be $800 on both positions. So got this area of potential resistance coming up there, which is basically a break of that level, and that level takes us straight into all the limit orders that are going to be sitting at those lows. So it's going to take a fair bit of power to get through. But if we do get through this resistance upside today, your next stopping point is potentially either that propulsion gap or yesterday's high, which is ADR. So what I might do is just move TP1 down to 2 and a bit R, because that banks me $300 pounds. It's the trouble with having different currencies on different accounts. 300s, it grabs me 300 of that, whatever it is. So that basically pays for the DAX hedge. And then if we do get a run, that second position becomes profit, which I'm going to move down as well, because there's no way it's getting up there. I'll go for yesterday's high. Might as well, just shy of it. But we'll see. At the minute, it's struggling to do anything, innit? Might be a lost day today. From your RSI2 tests, excluding yen, what were the top 5 and the worst 5 pairs? I don't know. We'll have a look. Oh, that reminds me, I've got to download that video from yesterday. I'm going to try and do that today. Let's load them all in, excluding the Swiss. Easier. I'll leave the Aussie New Zealand in a minute. So the top, you can't sort it. So the top pairs were Euro Pound, range bound, Pound US Dollar, highly liquid, Euro US Dollar, highly liquid. So it's basically EG, EU, GU, GC, and AC. So the Canadian dollar, commodity pair, two most liquid pairs we've got, and the most range-bound pair we've got. Obviously, some mean reversion strategy. So anything to do with commodities will move up and down with commodity sales. Anything that's highly liquid goes up and down all the time because there's lots of orders going through it. And anything that's range-bound goes up and down all the time. Mean reversion, what do you want? Stuff going up and down. Perfect. That makes total sense, doesn't it? The worst pairs were Euro Odd, Euro CAD, Euro New Zealand, Pound Odd, and New Zealand US. So again, a bit random there. Yeah, they were the worst five. But, you know, this is the thing. You've got to take all of this with a massive pinch of salt. Because this was post-COVID trading with a strategy. If the Australians had gone first with interest rates instead of the US, yeah, you would have had different results. If the Canadians hadn't dropped their interest rates first over the next 2 to 3 years, you would have had different results. So this is a representation of how these all performed. Just because the euro pound did the best over the last 4 years doesn't mean the euro pound is going to be the best over the next 4 years. Yeah, doesn't mean it's going to be profitable over the next 4 years, but they are all profitable. That's what you need to take away. The whole purpose of position trading is to create a portfolio that is profitable. Yeah, this is our strategy. And it's made up of multiple instruments with diversification. So you can't exclude the worst five, because if they become the best five for the next 2 years, you've screwed yourself. If you pick the best five and they become the worst five for the next 2 years, you've screwed yourself. Trade everything that works. Otherwise, you're going to get, you know, this is, as I say, everything that's happened, every single one of these trades here that has happened because of the market movement intraday on every single one of the days that these trades were taken. The market movement intraday on every single one of these trades taken is never going to repeat itself ever again in history in the future. Yeah. So what produced this result is never going to happen again. So you cannot go, I'm going to trade euro pound and I'm going to quadruple my risk on it because that's the best performing one. Sorry, pound US dollar was the best performing one. It's not going to happen that way. If the pound US dollar and the euro US dollar remain the most liquid pairs for the next 4 years and their interest rates remain diversified as they have for the last 4 years, great. If they fall into line and all of a sudden the US dollar suddenly becomes the second biggest currency because the Brazilian real, the Indian rupee, or whatever takes dominance, or China, yeah, these results aren't going to be the same, are they? Because pound US and euro US will not be the most liquid pair out there. The yuan will be with the US dollar or something, or the yuan ruble. You know, you just don't know, do you? So the strategy is intraday, 2 relative strength days back to back. We're trying to get some movement out of the profit take pullback before the next leg up. Yeah, as long as the market takes profit on its moves, it should continue to work as it has done for the last 2 decades. However, which ones are going to best fit that criteria moving forward? Nobody on the planet can tell you because we haven't got a crystal ball or a time machine. The only person with that is John Wick. And he doesn't know which way it's going either. So trade it all. Watched BBC Business News last week, and one analyst said it's to do with the services inflation holding UK interest rates. Yeah, possibly. Yeah, that would make sense. Services, for the UK, we don't export, we don't manufacture or export very much at all. We're all service-based industry. We're the largest banking hub in the world. Yeah, so all of our business is service-related, most of it. So obviously, if services inflation is still rising, dropping interest rates could not dropping interest rates will keep that at bay. But it's not. It's just one part of a very large machine to do with inflation, and interest rates. So this number is the number we look at, which is the core CPI combined. It's where it needs to be. They need to drop it. So, but this is the thing. This is the problem with trading in general and listening to anybody, me included, about anything, is when you do not hear from Bailey, the market speculates. And this is why you get lots of pumps and dumps in the market. Someone in the bank will say, we're not going to do this this month. And then someone on Bloomberg will go, that's because of services. CPI hasn't come down enough. And then someone on the BBC will say, it's very confusing why he hasn't done that. Everything looks quite right to me, including services inflation. So the guy on Bloomberg has a different opinion to the guy on the BBC. Who's right? Neither of them, because the Bank of England can control it. So if you listen to what everybody says, all you'll end up doing is changing your bias every time you hear a piece of news. That doesn't help anybody at all. So just ignore everything. Facts, data, this is what we work on. Yeah. The fact is, Bailey said, when we get here, this will come down. We are here. This is coming down. If Bailey changes his mind, he's got to have a bloody good reason for it. And the fact that he's shut up at the moment and not saying a word is why the market's sitting there going, what do we do? And it will continue to do that until it knows what to do. It will speculate that, but if it's wrong, you're going to get something like that. Yeah, exactly what we've just seen with the news for the New Zealand dollar today. Yeah, this is no news. Interest rates have not changed, everybody. Yeah, we know. You told us that. You forecast that. It's happened. Why? There is no reason. It's the buy the rumor, sell the news, or sell the news, buy the rumor, whatever you want to do, whichever way you want to look at it. There is absolutely no reason for that movement, apart from banks and institutions going, crap, guys, they didn't do what we thought. Okay, we'll get out. And they will reset it. And then it comes down to normal price action as to whether we can get ourselves back to that level. On this New Zealand dollar CAD, in 39 minutes, you're going to have a whacking great propulsion gap painted in there, that size. That's a hell of a target. Even that would be a lovely little trade, wouldn't it? But there's a high probability of that propulsion gap filling, or even a complete return to origin on this move. Because it is pure speculation. This is the banks getting it wrong because they haven't had any information. Euro New Zealand 225. There we go. So there's another one. 225 ADR. Huge move, look. Again, there's absolutely no reason for it. But it doesn't mean it won't continue either. Yeah. This is the thing we don't know. You never know what the bank's positioning is. You never know what their overall portfolio position is. You never know how much of this is hedge positions from New Zealand businesses that are exporting their sheep to Europe, hedging their own currency. You've no idea why this is happening because you're not in a central bank. There's 10 central banks that make this thing move. So all you've got to go on is what's on the chart. And we know that when things go up parabolic, it's very hard for them to continue. Therefore, the probability of a mean reversion is highly increased. Whether or not it does a flag, breaks, and continues for 3 weeks, we'll wait and see. Look at the last 2 times they didn't change interest rates. What happened to the New Zealand dollar? Didn't stop. So is this going to be another one of those didn't stop? So in which case, you have to look at the pairs you're in and go, right, okay, if I've got this wrong and I'm short on it, where are we headed? we're either headed there or we're headed here. So if you're short from here and you're going to scale into another position there, plan for that to be a drawdown. Worst case scenario. Best case scenario, it does that. I'll move this over there and I'll stop knocking it over. Can't believe I just did that twice. But anyway, yeah. So we'll see what happens. I haven't actually got any New Zealand exposure on at the moment. Oh, so I have. I've got 3 New Zealand longs now. Yeah, so I'm exposed on New Zealand now. So yeah, I'm really hoping this undoes. But it is what it is. You have to deal with it. RSI2 is a dark web conversation. Our secret. It's not a secret. It's been around forever. Been around for over 2 decades, RSI2. This is a different spin on it, though. This is not what is normal. This is my version of RSI2, which is just position trading. I'm taking a really good strategy and I'm turning it into a position trading strategy, which is what this EA is all about. The whole reason I released the position trading EA with these buttons on is you can take any strategy you've ever found ever that's mediocre or had a slight bit of success, press these buttons, and if it's wrong, it will turn it into a position trading strategy that will work, because that's what works, position trading. So it's not a secret, but everybody is trying to execute RSI2, and it has done in the past, on a daily time frame using a stop loss. And after 10 trades going wrong in their direction because it's a squeeze, they go, RSI2 doesn't work anymore. It does. You just weren't patient enough to wait. Lots of different variations on all strategies. The thing is, everybody thinks when you take a strategy and you change it, everybody thinks you're trying to improve it. What you're actually doing most of the time when you change a strategy is you're making it more comfortable for you as a trader. So I'm not comfortable using a stop loss and getting stops out over and over and over and over again. I'd much rather get into something that's got a high probability, and if it doesn't quite work first time, take 2 or 3 extra positions and then take the profit. So I'm just adapting it to my trading style. I'm not changing it. The fact of the matter is, when the RSI2 on the daily is extended above 90, I do the same thing as Larry Connors did 20 years ago. Nothing different. He takes a short. Except I take a short in a slightly different way on a slightly different time frame using a slightly different risk parameter. Same strategy though. The theory of the strategy is RSI2. The relative strength over the last 2 days being strong would indicate a pullback is due. The relative strength over the last 2 days being weak would indicate a push is due. That's it. That is the theory. The relative strength for multiple days, hours in a row is bigger than usual. It's just a condition in the market which is identifiable, which has a high probability of the opposite happening. 73%, as we found out. 72.94% at the time. This is right. In fact, that's not strictly true, because actually that's the winning percentage of individual trades. So it's actually higher than that, because if you've got a trade and you take a profit there, that is a loser. It's not. So that actually gets counted as a loser, even though the overall position is profitable. So this winning percent of 72.94 is actually underestimating. It's actually higher than that if you look at the actual number of positions that actually become profitable. BOE has a bad track record on predicting inflation. I know. This time, though, it got it spot on. Always behind the curve. Well, it didn't get it spot on, did it? It had got it really badly wrong. We were 11%. We got it really badly wrong. But on the way down, we got it pretty much right, which says you should be now doing what you know. It's like when you get something right for the first time, use it, play to the facts. So what worries me about Bailey now is, yes, remember last time when we forgot to increase this and this thing got way out of hand? Well, now it's come down to the level. If we do that too soon, it might not happen. No, what might happen, Bailey, is it might go twice as fast down, in which case you're going to screw it up going the opposite way as well. Drop the bloody rate. Just doesn't listen, does he? He needs to. They need cameras. The brokers have got cameras in here. Bailey needs a camera in here. Listen to me. Drop it. Right. That's all I got for you today, really. So today I'm going to get that video down from yesterday where I went through the RSI2 strategy and the back testing and the robustness testing and everything. And I'm going to clip all that out into something that hopefully makes sense and post that up if I can today. And then I'll get the RSI2 set file out, although you don't really need it because it's very simple. I went through it yesterday as well. So so that if you want to trade it, you can. I've set it up on my on another account today. I don't think anything is extended on RSI2 on the daily. So I might get an entry today. We'll see. Oh, that's the one I was looking at. Yeah. So yeah, there's no RSI2 extensions today. There's nothing extended today, so there won't be any entries today. Euro odd might get an entry. Possibly pound yen if it continues to rally today. That's it. So there's only going to be the possibility of a euro odd entry anyway today. So yeah, nothing to see. Right, that's all I've got for you today. Leave a thumb before you go if you can. It would be helpful. I'll get that video downloaded and try and edit it. I need to watch it back and see if it makes sense. If it doesn't make sense, I'm going to need to make a video. Yeah, I'll try and get those set files out today, but you can probably replicate them yourself anyway. So anything else you need, I'll be in Discord or Telegram. Other than that, have a good day. I'll be back tomorrow at 2:15. We're trading the New York Open. Tomorrow afternoon. And then back Friday morning, 7:45 for the DAX and the FTSE. And hopefully this thing decides to actually move today. Looking like it might break long. So may be able to get that covering that today, but I think that's probably the best you're going to get. So we'll see how the New York session goes. So an order won't trigger unless the prior day triggers. With the RSI2 strategy, well, no, the position trader EA works slightly differently because it monitors live, but you can see I've shut it down now, but you can see it'll only trigger if the RSI2 condition is extended yet. And then you need a 4-hour push down to get in. So difference between my version of RSI2 and Larry Connor's. Larry Connor's basically at end of day, if RSI2 was extended at end of day, he pressed the buy button. I want to wait for some bears or bulls to enter the market before I press the buy button. So I go with the flow. I don't get in just because something's extended. I get in when the guys on my side are pushing my way. Again, it works slightly differently, which is why the position trader EA is good at trading it, because it goes with momentum rather than just getting in because of the condition. A condition in the market that goes like that can go like that forever. If there aren't any people buying, you don't want to buy it. Wait for the buyers to come in. At least show some sign that you might actually have a chance of your trade working before you enter, which is why we're using the 4-hour bull or bear candle to get into the market. Right, I'll leave it there. Anything else you need, let me know. Other than that, I'll be back tomorrow, 2:15. We'll trade the US Open and then back Friday. All right, so have a good one, and I'll see you next time.